Hello, and welcome to another update video on Bitcoin. I want to take a moment to talk about the relevant levels for next week because we are approaching a new trading week, still Sunday, but we're approaching the weekly candle close, and normally there is quite a lot of volatility around the weekly candle close that typically comes in around this time usually. So we definitely have to pay close attention to it. And be prepared for volatility, and it could often set the tone for the week. So let's take a little look at the daily chart here, and I wanna take a look here specifically at this resistance area, and then we'll also take a look at the smaller time frame and check out the microstructures that are developing there. So first of all, honestly, we're still holding above all of these support levels. Structural support levels are still holding. We are way above critical Fibonacci support at around 83K. We're still holding above the 55-week exponential moving average. And so you can see we haven't even broken decisively below the August, September, and July lows. So we're holding above all support levels. Basically, we're still grinding in a sideways range. That means we have several areas to watch next week, specifically this resistance area between $113,460 and $121,750. I introduced this resistance area, I think, a couple of weeks ago. It was as a result of the sell-off on the 10th of October, and then obviously we had another lower week later. And so we introduced this resistance area and said it might be relevant for any corrective rally. So be aware when we hit when we hit these levels, be aware that rejections can happen. Well, and guess what? We had a first test on the 21st of October. That was the 50% retracement at 113,460. So this was the first resistance area or level, and the price got rejected. Okay, then we had a higher low and the price pushed higher and then reached the next one. So 115,930. So you see, these are relevant, right? These are relevant specifically if we have a fib level that aligns with a structural level even more so. This was here on the 13th of October, where we then had a reaction, to this swing high, right? And then on the 27th, we had a rejection at the same level. So those Fibonacci levels in this resistance area, they are highly, highly relevant. Should the price re-enter the resistance area, we might even see a rally to $119,530, which is the next level above the so-called 78.6 retracement. So these are the resistance levels I would watch in the coming week and coming weeks. If we break above this zone, the door opens to 136K plus. I would still personally like to see another rally, but we might not get it from directly here because the rally from the 17th of October low is not a clear impulsive structure. So of course, even though we have a three-wave move up, it doesn't mean the market has to go lower. The market definitely could try to rally higher, but we don't have the probabilities that are indicating that at the moment, okay? Now to the downside, I would say this entire area, it's difficult to name exact levels. I say it's sort of the area between 104.5K and 107.5K, this support area structurally. It's not a Fibonacci support area, but you see that this is exactly the area where the price found support in October, just here in September and August, and in July. So it's a strong support area. This is basically where in May the price formed a swing high, right? So we have the area here, resistance in May is now support. Breaking below it opens the door to round about 98 to 99K. Which is where the 55-week exponential moving average is located. It's grinding higher every day. It's now located just above 99K, so more like $99,100. So this would be the next support area to watch around that level, but also where we have the June lows located, right? So we have several levels here that matter. Resistance above, support below. The market continues to move in corrective structures. And I think we have to pay very close attention to the microstructures to get the earliest possible signals, because the main pattern and the main structure I am observing and watching now as we're heading into the new week is this 1-2 setup to the downside. That is not a prediction that we have to break down, but it is an important pattern that's developing. So it has its own resistance area. And it's because we have a 5-wave move down into the lows of this week. And this here could be a 3-wave move up that's developing as a 1-2 setup. If we get 5 waves down, it indicates usually the trend is down. The move up was only a corrective bounce. And if we stay below $114,246, that pattern remains relevant. Any break above that resistance area I just mentioned would open the door to an invalidation of that pattern, which should happen around 116,400. So these are the two patterns that need to, or the two levels that need to be broken to indicate that the bulls are stronger than the yellow pattern indicates. And that means it does not mean that a break above resistance means the analysis is wrong, because we always have a bullish and a bearish count. Yeah, it means to be aware of, or it means that we know what the levels are, or at least we think we know what the levels are that lead to a change in sentiment. So I don't want to tell you we're breaking down. I'm saying there is a risk, but watch the resistance area, because if we break above it, that could be an important signal that could set the tone for the week. For now, we're just ranging here between micro support levels and micro resistance. A bit higher is possible, even in the yellow count. But once we break above those thresholds I mentioned, the bulls are likely going to take the lead. That's the update on Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, then also check out our other updates on our other YouTube channels. For example, the More Crypto Online channel, where we cover Bitcoin every single day as well. Thanks so much. Bye-bye.